Alright, ladies and gents, so in this video I'll be introducing the MACD indicator, properly known as the Moving Average Convergence Divergence indicator, one commonly known way to read it and one lesser known way to read it. So, here I am on Thinkorswim. I am looking at the daily chart of American Airlines. Down at the bottom over here is the MACD indicator itself. So this MACD indicator on Thinkorswim also comes with a complete histogram, as you see in the back right here. On it are red bars that represent bearish momentum and green bars that represent bullish momentum. So what is the MACD? So the MACD is a trend following lagging momentum indicator. That means that its measurements come after the fact, so after price action has already occurred. Thus, it is good for confirming a trend or change in momentum. Now, people don't need to know the fine details behind the MACD in order to use it, but I personally feel that a little background understanding helps one better utilize an indicator. So the MACD is composed from 3 EMAs, a 12-period EMA and 26-period EMA of the stock, and a 9-period EMA of the MACD itself. So, the difference between the 12-period EMA and 26-period EMA of the stock is what you see as the blue line, also known as the fast line. The 9-period EMA of the MACD is represented by the pale yellow line and is called the slow line. Now there are a couple ways to read and use the MACD. First, one can read the MACD based off of line crossovers. So when you have the fast line, in this case the blue line, crossing over the slow line, the pale yellow one, that is considered a bullish crossover or a buy signal, such as in this example right here and in this example right here. Okay, so momentum is then considered bullish for as long as the fast line stays above the slow line. On the other hand, when the slow line crosses over the fast line, represented over here and over here, that is considered a bearish signal or a sell signal. And momentum is then considered bearish for as long as the slow line remains above the fast line. And as you can see on the histogram in the back, following a bullish crossover, on the histogram you then see green bars appear representing the bullish momentum. Following a bearish crossover, you then see red candles that represent the bearish momentum. Now, the MACD is typically a lagging indicator, but when you use it in a way that I call the peak and valley method, it can be used as a potential predictive indicator. So, when looking for peaks and valleys, I typically look at the fast line for wherever it tends to flatten out. I've highlighted some areas over here, 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 and that's it. Okay, so in the case of a peak, I look for where it forms a plateau or tops out, or you can say it starts to flatten out or curve, right? In this case, here is a peak, here is a peak, and here is one more peak. Okay? And as you can see at these 3 peaks right around here, you can see that there is a corresponding up above. I highlighted an area where the price has essentially topped out and soon after follows, a downtrend. Same thing over here. Topped out once, downtrend, topped out one more time, downtrend. And finally over here, in this large peak area, peak, downtrend. One more peak, downtrend. And as you can see, after each peak, there is actually soon after, right, it's being confirmed, there is a bearish crossover. Over here, bearish crossover. Last one over here, bearish crossover. Okay, so conversely, you also have valleys. right? Valleys. So those are times that you could think of the stock as being oversold, and it could be a potential buy signal. So over here is a valley, over here is a valley, and so as you can see, around the point of this valley here, the price bottoms out, and then soon after an uptrend ensues, and there's actually a bullish crossover right around here. Likewise, in this valley, right directly on top of it, smack dab in the center, there is a bottom and then a short upward momentum right here. And right behind the valley, soon after, is a bullish crossover. Okay, so there you go. That is the MACD, what it represents, and how you can use it. Now, an important thing to remember is that although the MACD is a powerful indicator for confirming and sometimes for trends and momentum shifts, any indicator can still give false breakout signals. So it's always important to use the MACD in conjunction with other indicators, and more importantly, with a solid understanding of price action and supports and resistances to increase the likelihood of a correct buy or sell signal.